Now, Iran's reimposed control over the Strait of Hormuz remains a key risk factor feeding into Nigeria's inflationary pressures through fuel, transport and food cost. Meanwhile, in the equities market this week, sentiments are likely to remain positive but selective, with investors focusing on fundamentally strong banking, telecom, industrial and energy stocks, while profit-taking may also persist in the previously rallying counters. Patrick Ejumedia, head of research at Sterling Asset Management and Trustees, joins me now for more on what to expect near term. Thank you so much for joining us on the show today, Patrick. It's quite difficult to play out your cards and expect scenarios to go. And I think case in point was Friday, the market quickly adjusting to the news around the opening of the Strait of Hormuz. Yes. Saturday, it was another readjustment. Walk me through how markets, especially in Nigeria, beginning to assess the whole global shock, inflation, and then our macro risks as it is today.
Oh, okay. So I think what is quick to say is to say that the Nigerian economy is also reacting to what is happening at the global space. Yeah. And these have impact on businesses, on individuals, on the capital markets, on policymakers. We've seen the recent numbers of inflation that came out. We saw inflation that has been trending downward for about 11 months, now beginning to come upward again. Yeah. We've also seen how the various rates that the government have tried to do in the fixed income space has also been trending up, all in a bid to also control, capital from flowing out. Yeah, we've seen some level of increase in terms of stability in the FX. But again, if you look at what is happening to our foreign reserve, it has also been coming down, depleting, which is showing that the government is also trying to ensure that all what is happening at the global space does not, to affect that stability that they've been able to gain for some period. But for businesses and for individuals, the high numbers in terms of prices, logistics, and transportation costs is hitting on individuals and businesses' pockets, and that's why we have seen that high cost and all that. So the question now is it favorable to us as a country? If some people say it's favorable to government, but I've also said yes, it's favorable in terms of revenue. But for how long? Because I've also seen that revenue is being used to guide against the dollar, the naira from depreciating, and that's why we've seen the reserve going down. So if you look at it, say, okay, even if we say it's good for the government in terms of revenue, it can only be good if we're able to match up our oil production up to the benchmark that was given to us. So if you check the data by CBN, you will see that our oil production is around 1.3, which is still below the benchmark. So are we really gaining from it? These are issues that we need to talk about.
Yes, and talking about issues as well, I think the last conversation we had, we're unpacking the March inflation data. Now, looking at April, your near-term outlook for Q2, give me a range.
Yeah, so when the March inflation, when we saw what was happening in the global space, we did a prediction that the March inflation was going to go up. And of course, it did go up, even though it wasn't up to our time, because we were looking at 15.5 and against about 15 point. For April, we're also saying that inflation data is going to go up. Again, because of the lag effect of what is happening at the global space, because again, it takes some time for many of these businesses and all that to adjust to what is happening. There's also the Easter holiday and the holiday season that we're enjoying now that is likely going to push demand for certain commodity ups, and that will also push, inflation for April up. So we are thinking that inflation for April will be around 15.6 and 16.4%. So that's the range that we have put down for our forecast for April inflation.
And then I think I want to bring the Ghana scenario into the mix now. I know this might throw you off a little, but looking at the scenario there where they have a temporary fuel subsidy for about a month, just to ensure that the pass-through effect is not as sharp when we're looking at energy costs, and then that translating to the average Ghanaian on the streets now. Do you think we should also be looking towards this sort of scenario here?
For me,
coming from our previous subsidy regime.
So that's the issue. So because it's not quite long that we just did the policy, the removal of subsidy. So going back to it, we kind of bring about trust about what the government is doing. So for me, I think what we just need to do is to increase our production of oil. If we're able to do that, and we're able to see that huge amount of the production, what we consume locally, is being produced locally, then we might begin to see some level of impact in terms of price reduction. Okay. The reason why it has been like this is because what we import and we consume is high. Yeah. And that's why it appears that the price is high.
And there's still the challenge around smuggling and a whole lot more. But let's talk about the index also extending the trading time now, the trading window. Your take around that regard. And then when we look at the rally in the equities market, would you say it's a strong rally we should expect near term, or this is all about fragile optimism?
So yeah, so that's what I've been hearing from different people about, oh, the market has, for a while now, has been above 200 levels. And people are saying that, oh, it's now time for the market to adjust. But for me, I feel that the new dynamics that's happening in the market, even if the market reverses, it's not reversed to its original stage, because a lot of things are taking place. So for me, what I see basically when you look at what is happening in the market is that, yes, the market has been above its 200 basis, the 50-day and 200 moving average for a while, and is likely to remain there. And a lot of fundamentals are there that are currently driving the market at that level.
Okay, wrapping up the conversation, let's also bring Stanbic IBTC into the mix. Before then, I think we've not even talked on monetary policy direction, but let's look at Stanbic's numbers. What do you make of it?
Well, I think the results are good because you see what happened in terms of their gross earnings that grew by about 38%, and they were able to take it down to their PBT that went up by about 81, approximately 82%. You know, that shows some level of effective management. But again, if you now want to go down to look at, okay, what's the source of the revenue in terms of diversification of income, you see that a larger percent interest income still takes about 38% of that, which is about 69% in terms of fraction of the gross income. So it means that, yes, they are a bit diversified, but larger percent is still on the interest income. They are still enjoying the interest environment, the high interest environment that we are currently seeing at the moment.
Yes, to talk about the high interest environment, liquidity, yield movement, all of this is also important for investor positioning going forward. But I talked about the MPC. What should we expect come next month? We're already counting down. Today's the 20th.
Yeah, so it's still like almost like a month to the time. Again, from all what is seen, I think what will happen is that the government is most likely going to hold rates. But again, they are also going to be looking at liquidity. You know, they're also going to be looking at the yield. Basically, is going to be dependent on the liquidity and the stop rates and the various insurance that is likely to come up within the month. But overall, I think there will be a holding on rates.
Okay, Patrick, thank you so much for your time. That was Patrick Ejumedia, Head of Research at Stanbic Sterling Asset Management and Trustee.